And here we are. It's the budget special from IG. Joining me today, Axel Rudolph and Chris Beecham to go through Rachel Reeves. As she continues speaking, we are seeing a nice positive reaction in sterling, 131.96. We're going to be looking at why and also how the OBR, little mistake there, what the gents think of that and how it's affected the volatility around gilts as well. So far, Rachel Reeves in fine fettle. She's had a crack at Nigel Farage. She's had a little go at the Greens and a big go at the Tory party for their COVID contracts. Chris Beecham, what do you think so far?
It's a very strong statement from the Chancellor. It's nothing, no real surprises as yet. The rabbit has not been pulled out of the hat, if there is one. But I think certainly it's a very confident message, and one that, as you know, obviously it's been unveiled early by the OBR, which is a bit of a mistake, but it seems to have given, if you like, a bit of a bounce, a spring in her step, really. And the market likes it from the initial reaction, really.
I think ever since we got the debt as a percentage of GDP, so that is 83.7 in 2028-29, falling to 83% in 29-30 by the end of the Parliament. So 83%, that is when the pound started to rally. We're now over 132 and it's going strong, 132.09. Axel, how's that looking on the chart?
It's looking interesting because we had quite a lot of gyrations just before the budget was announced, and now, as it has been announced, we are bouncing back off these short-term charts. If you look here at the 15-minute chart, you can clearly see, as you just said, Rich, above 132. But more interestingly, if we look at the daily chart, we can see that we've broken through some resistance here. And if we manage to close above these highs from last week and the week before, it could take us all the way back towards 133 and higher.
Because that's the big level, is it? August 25 is 132, isn't it?
Yes.
So that's the one we're watching, I think, really. Sorry.
So as she speaks, she's on to welfare now, guaranteeing new money for youth. Everybody's getting something, aren't they? All around the country, we've had money to Darlington, to Derby, to Grangemouth. Scotland, a big receiver of money. But yeah, over 13 billion sterling for 7 mayors around the country. She wants to expand that growth outside London, doesn't she?
Yeah, I think that's the theme, really. It's sharing on the proceeds of the growth that she can give, if you like. And notably from the OBR forecast, of course, the productivity outlook is weaker than it was in March, so that's still a worry, I think. But growth for this year has been upgraded to 1.5% and downgraded for next year. So it's kind of giving with one hand and taking away from the other from the OBR. But I think it's a relatively solid set of announcements so far. And as you say, we've gone on past the sort of big numbers in terms of the headroom. She's given herself a lot more room to play with in terms of the money she has by the end of this Parliament. Yeah. But as you and I noted, a lot of these spending cuts are backloaded to 28-29. When the election is going to be coming down the line, it's supposed to be coming down the line, and you wonder how much of that is actually going to take place, given the propensity for politicians to promise the earth ahead of elections.
Now, of course, the ISA allowance has been changed with regards to cash, but only from April 2027. So you're going to still have 20,000 to put into cash ISAs or investment next year, 2026, but then £12,000 maximum into cash ISA subsequent to that. As expected, is that from the press reports?
Well, they sort of stayed away, if you like, from sort of cutting it completely and making a far more dogmatic statement. But at 8,000 for investment, as you say, the interesting thing, of course, is the way they expect to raise almost $5 billion from curtailing the tax breaks on salary sacrifice. That's the question that people need to be thinking about here as we go into the spending and saving approach over the next couple of years. Because by comparison, the management tax is only going to raise about 0.4 billion off the back of this. So I worry about this budget slightly, that it might fall apart in the post-match assessment, if you like, which is often how it happens. Because once people dig into, oh, this is going to come from you, and you've got to pay more in terms of freezing the tax thresholds, you wonder how the polling is going to play out, I think, further down the line.
£5 billion of efficiencies by 2031, 4 billion around fraud, and also giving HMRC new powers as well to go out and catch those that are in tax avoidance schemes. So yeah, there's a lot. She's managing to get a lot of money from things that you got to work really hard to,
Yes.
to actually collect them, don't you?
Exactly. And the tax burden is supposed to go up to 38%, which is the highest ever. So as a percentage of GDP, that is continuing to rise its highest level. But yes, as you say, these much vaunted efficiencies that you always get in every budget and better collection of taxes, there's a lot riding on that, really, for a government, in fact, governments, plural, that have not been able to find those efficiencies over the last decade or more.
Axel, turning to the FTSE 250. So if I'm looking at, if the guys want to get my screen up, we're looking at an ETF here, the Invesco one. Now you can see that was the OBR release, a move higher first of all, then that dip, but we're back to where we were on that original OBR release. How does it look over a longer time period?
Well, that's the real question. As Chris just said, I mean, in the short term, we have a positive reaction clearly. And if we go to my chart, for example, I'm just looking at the 10-year gilts. We basically went from before the budget from 452% now down to 45%. So quite a big move just in the last few minutes. I mean, I can actually go into a shorter term chart and put it on here on a 5-minute chart, and you can see this move back up, and then now we're heading back down again. So the yields coming down is positive. The market likes what it's heard so far. And in the short term, the reaction seems to be quite positive. Now, the question is, can we actually fall further, and can we fall through these lows in October we saw? And these are around the 438 mark. And only if that were to happen, especially on the 30-year gilts, if we were to fall, then we could really benefit from this budget. But right now, that's definitely not the case.
Okay. I heard a groan from behind me when the defence spending came out, 2.6% of GDP by 2027. You weren't happy with that one, are you?
Well, I think the NATO requirement is for 3% by that point. And I think this is the problem, that if you are expecting to have to spend more on defence, there's not that much in terms of headroom in the budget. So we're assuming that there won't be any more commitments from the government in the years to come, and that's, I think, the major problem. Really, it sounds like it is a small number. Remember, we're paying more now to service the debt than we are on the defence budget. So I think obviously the fall in yields is a good thing from the government's perspective, but it needs to carry on. Really.
Yeah.
And on that note, if I can show you the 30-year chart, I mean, this is exactly what you just said, Chris. Over the last 5 years, I mean, the yield on the 30-year gilts has gone from 1% to over 5.25%. So we're paying over 5 times more to pay back on our debt than we did before.
And she did make that point. £1 in every 10 of government spending is on interest alone. I mean, that is, well, is it sustainable?
Clearly not, no. I don't think so, not long term.
Yeah. Right, we were not quite on income yet, but the OBR release did state that 8.3 billion she's going to take in from freezing income tax thresholds for another 3 years. 3 years we're going to be paying
like
the same.
the extra 30 billion in tax they're raising, something like 12 billion comes from the freeze on tax thresholds.
Is it just an easy one because people don't actually notice?
It's the default. You hope they don't notice. So it gets them past the manifesto pledge not to raise income tax, only in the sense that they're not actively doing it. But certainly it does mean that you won't see any relief in that. Remember, the higher rate was originally introduced in the 80s for people earning the very highest amounts of tax. It's a trick employed by governments of all types since the 80s. So in one sense, you expect it to happen. In the same way that, of course, don't forget we haven't mentioned that the tax on EVs is the next one coming in, but because every budget assumes that the freeze on petrol duty continues, and that's kind of how they get their sums to add up. But of course, or that the freeze on petrol duty is removed, and that's how they get the numbers to add up. But of course, every year, lo and behold, it gets extended, and that money doesn't come into the government's coffers.
Just a reminder on those frozen tax bans then, what are they? She's asking everybody to make a contribution towards reducing this debt. That means the personal allowance, you're still going to get 0% on the first 12,570. It goes then to 20% up to 50,270. If you're earning above 50,000, you will be paying 40% tax up to 125,000, and over 125,000, you're paying 45%, unless you're in Scotland, because then you're paying more. Nobody in Scotland earns over 125,000, do they?
They do. They don't pay it in Scotland, but that's not.
But yeah, a lot of money going up there. 800 million going up to Scotland, to local government, but also a big investment into Grangemouth, which is where I used to spend my youth running around an athletics track right next to an oil refinery, which was wonderful for the fresh air that you were breathing. But that now going to be changed into a state-of-the-art renewable energy area.
Okay. Interesting.
So what's still to come then? We're on to income tax now, and of course we know she's not going to increase. The BBC is reporting that the income tax threshold freeze is a year longer than was expected. So that's where she's got an additional 2 to 3 billion from.
Yeah. And as we say, that's going to happen in the year before the election. What happens if the bond market decides you're not going to do that? What happens if they realise that will be different? I mean, yes, 2029 is a long way away, and the whole fiscal picture should be different by then. But you do have to wonder what the marking of this budget by the bond markets has yet to take place, really.
Quick look at the UK long gilt. Axel showed us the yields there, but gilts now up to 9306. That is the how we've seen them today. Where does that sit, Axel, compared with the 2022 fiasco? Should we have a look right at? We won't get it on this chart, but
well, I can show you on the 30-year chart here, for example, on the daily chart. So 2022, maybe I need to go onto a weekly chart to show you, but it's nothing as dramatic as what we saw back then. Here we go. You can see the big spike there. We are seeing the opposite. We are coming off very, very gradually, at least today. And what we do want to see is for us not to rise above the high we saw in September, basically. And that was a yield around 574, I believe, if I remember correctly, on the 30-year. And instead, what we want to see, psychologically speaking, us falling below the 5% mark, because it's a run number. So that would be good.
Right, some good news for you both. Are you ready? The mansion tax is only going to be $2,500 a year on properties over 2 million, up to 5 million. If your property is over 5 million, it's going to cost you 7,500.
Okay.
So, are the smiles on the faces?
I'm safe.
2,500 for a 2 million property. So that's what, just over 1%.
Yeah.
I mean that's a big let off, isn't it?
It is quite remarkable, really. It seems like it's a sort of concession to.
Sorry, 0.1%.
I was going to say.
Yeah, 0.15% or 0.125%. It's nothing.
Yeah, but look, if you were in the 1980s and you bought a house or you inherited one from your parents and you are an old grandmother now, for example, how are you going to pay for it if you're cash poor and you just live in your house, which happens to be in London in an area where it's worth more than that? So maybe that's why they haven't really gone for that one.
And it's only going to raise 400 million by 2031.
Which is really not much, is it?
It's bizarre,
over the years, so what's that? Over 6 years. It's a drop in the ocean.
So just a political move to appease the left?
It feels like it. It feels like, especially when you know of the 26 billion raised in tax hikes, 9 billion of that will be spent on higher benefits. So it feels like there's a certain element of, and we know that if, for example, Reeves is hammered by the left wing of the party and therefore her position becomes less tenable, the risk is that someone else comes in who would spend more. So the market has to balance these two elements, really.
Okay.
You cannot simply go full-on George Osborne austerity moves. Otherwise, you risk civil war within the Labour Party.
So it's basically doubling council tax for properties up to 5 million by the sounds of it.
Seems to be that way, doesn't it?
Slightly less, but right. Let's see how the FTSE 100 is responding. Then we haven't looked at this one yet. Let's take a look at it now. We are 9661. That's certainly better than it was looking before she started speaking. So the market taking it reasonably well. If we take you back for about 2 weeks to see the highs, we managed to get up to 9,928. Axel, are you going to wear my baseball cap with FTSE 10,000 on it if we get there?
I think it will depend not just on the budget, but on the US markets. And if you look at the S&P, we actually managed yesterday to close above last Thursday's high, which technically is very good. So yes, we may well see that, but I don't think we'll do it on our own.
And this is your chart here going back the 2 weeks to the highs, is it? Yeah.
Oh no, this is cable. If you want me to look at the FTSE 100, let me just do this very quickly.
Right, guys, yeah, back to mine then, guys. We'll have a quick look at that. So there we go. Beachy, what do you think there?
Spectacular day for the banks. So Lloyd's up 4%, Barclays up 3.5%, NatWest up 2.6%. So very strong moves for that heavily weighted sector. Also, some others like it's a good day for precious metals as well. So you've got Fresnel and Endeavour Mining powering away as well. House builders, Barclay Group down nearly 2%, but I'm not seeing. There wasn't much in the budget so far for them, was there, particularly in terms of actually pledging to increase house building? So Persimmon also off by 1.4%, Taylor Wimpey down 1% as well.
But what is interesting, we're seeing more of a market reaction than we usually see.
Yeah.
Which is kind of strange because everything was leaked beforehand, more or less.
Yeah.
So
let's go to the biggest movers in the UK then, as we have it at the moment. Rank Group up 8.
So they are casinos, aren't they? So that's that coming in. St James's Place Wealth Management, so that's a changes to the ISA rules, the element to watch there. But as we say, yes. And then, of course, the banks got name checked for the investing hub, didn't they, as well? So that's part of perhaps why they're getting rid of a boost.
Right. And yeah, of course, they're most likely going to be speaking positively about the budget. So that's an added
been
bonus
asked to as well. So rung up to ask to say nice things about the budget so far.
Right, Marks and Spencer's then up 3.3%. So the retailers so far doing their well. We've got, I guess, JD Sports up 2.5, WH Smith up 2.5, Primark up 2.5, Weatherspoons. It's a win for all so far, isn't it?
It feels like it. It's a bit of a vote of confidence in UK PLC and the economy, I think, really, that the budget has been better. And we were saying this weeks ago that a lot of the mood music around the UK economy, and you understood why, was very dire. And it seems that the budget has done what we thought it might do, which was clear a lot of the air and says this is the footing that the country has been put on for the time being. Yes, it's paying more taxes, but it looks like the picture has improved from, I mean, you couldn't get more doom-laden forecasts than earlier in the year for the UK economy. So anything was better. And that's partially why, as we say, the pound is doing so well against the dollar. What's it doing against the euro? It's the euro dropping as well. So that's falling back again, although within the context of a broader uptrend, isn't it?
show you against the euro here, we're falling back towards the support line. But yes, the pound
Better
doing
day for the
pretty
pound
well.
there, yeah.
Yeah.
Right, so that's euro against British pound. So that's how many euros we get for going on when we go on holiday.
Exactly.
Okay. Right, what about the losers on the day then? Well, it is Diageo, unfortunately. Is she coming for your money
Nothing
for
the
the
pub so
drinks?
far. No, exactly.
I don't think we've heard about that just yet. We've got one breaking headline. The Chancellor announces a cap on pension salary sacrifice. This was very well known about. A £2,000 cap on salary sacrifice into a pension with contributions above that taxed in the same way as other employee pension contributions. Coming into effect in 2029.
The OBR says that almost 1 in 4 people will be higher rate or additional rate taxpayers by 2030 to 2031. It's up from 15% 10 years earlier.
So, gents, a chance to fill up your pension before then.
It seems to be the way, yeah.
3 years to do so, not a problem. And then, yeah, just the home builders not doing great so far. Vistry,
Yeah.
where are we? Bellway down 60 basis points. However, they have all rallied about 8% since that Goldman Sachs piece on Friday with buy recommendations on the sector. So you're probably reasonably happy just that they're holding levels.
Yeah, and let's not forget, I mean, they've been at a really, really low base for quite a few months now.
Yeah.
And if you look at them on the yearly charts, they're all basically in a downtrend still. So
Yeah.
there's still a long way to go.
Yeah.
What else is catching your eye then, Axel?
I just wanted to see where basically we closed today, because the intraday moves are always very interesting, but we saw that before the budget and after the budget, and you can see this here on the Euro Sterling chart. We go up, we go back down again. Will we actually close down? Will yields actually fall today? And then also at the end of the week, from a technical perspective, that's what we need to look at. And if that's the case, that is encouraging. But if not, we'll have to see. But yeah.
In your chaps' experience, how long does it take, the people that are moving the money around, how long did it take for them to really go through the details and put it into their models and spit out an answer?
There was a question raised by Bloomberg pointing out if you looked at obviously last year's budget, it was only really the next day when you saw the actual rise in yields. They went from 4.2 to 4.4. Obviously, if you want to go to everyone's favourite budget, the mini budget from 2022, that's when you sort of went from 3.4, we were at 4% the next day and 4.4 the day after. So this is, again, this has to be priced in properly. And I think the other worry is, as the Telegraph points out, coming into the election, they promised 8.5 billion in tax rises. 16 months later, you've now increased taxes by 66 billion pounds, which is more than 7 times. So there's a question of how's that going to affect your polling and what's that going to do to pricing for the bond markets? Because the worry is that you have the May elections coming up, and current polling, they will do very badly for Labour and arguably for the Conservatives as well. What that means for the leadership of both parties and what that means potentially for tax and spending plans as we go beyond 2026.
Right, getting confirmation on the excise duty for electric cars. Either of you gents electric drivers?
No, I'm still driving gas guzzlers.
Yeah, me too. But they're more fun.
Right.
I find.
And we know you like your driving, Axel.
I do indeed.
We've touched on that on the Autobahn before, haven't we? Now, the electric vehicle excise duty will be payable each year alongside vehicle excise duty at 3 pence a mile for electric cars, 1.5 pennies for plug-in hybrids. That will enable the government to double road maintenance funding in England and offer a further 200 million of a rollout of electric vehicle charging points, which was known as one of the big sticking points while you both still drive gas guzzlers.
Mm-hmm. You're not all like Angeline and her electric cars.
So, yeah, this afternoon, can we detach from the US moves, Axel, do you think?
I don't think so. I think they will still be driving us, but what we've seen so far might be a buffer either to the upside or downside with regards to where we close today. But as Chris said just now, we need to look at what happens tomorrow and also Friday, because let's not forget Thanksgiving. So we're on our own, and that's where we want to see yields coming down, FTSE continuing to rise in the next couple of days, basically.
And notably, of course, yesterday was the first one of the rare times that Nvidia was down heavily and the S&P was still up. So Nvidia at one point was down 6-7%, end of day down 2.5%, I think it was.
Yeah.
But we still had a gain for the S&P. So which is the first time that's happened properly since about July of 2022.
So have we changed now? Do we have the new Nvidia? Is Google?
It's Alphabet.
Yeah, Alphabet, exactly.
Yes.
Well, nearly 4 trillion valuation. I literally just wrote an article on that. But yes, I mean, if you look at the chart, up 70% this year. Yeah. If you compare it to all the other Mac 7, incredible performance.
Doing so much better. And if you are of a bullish persuasion, as Rich now is, long,
absolutely,
eventually converted to the cause, that's the kind of market rotation you want to see. Yes, it's ugly if you're holding Nvidia, but if you're seeing leadership of this market shift from one to another, and the market can weather that sort of passing of the baton, which is what the price action suggests it's able to do, then that is a positive if you expect the market to for the S&P to push on towards 7,000.
It's just around that debt to GDP figure then, right? We've got an 83% estimate of UK debt to GDP by 2030.
What's the current level? 105, is it? I don't know.
Check that. Well, it was certainly up there towards the 100. But in America, it's well past 100. The forecast more like 125%. So if you're running the deficit so high in the US and you get to 125% debt to GDP and it's 83% here and they stick to that, what does that do to gilts and to our long end yields?
if you see the reticence coming through from the UK government on spending, then that, I expect, does transform your outlook in terms of borrowing costs. And of course, you have flagged before that the US remains on an unsustainable debt trajectory. So if that continues, then it makes life a lot more difficult for the US government, but at least it sort of clears the air somewhat for the UK. Because the key problem has been that though our debt to GDP ratio, and it actually is about 94% according to the ONS, is lower than France. It's higher than Germany's, I think, but it's lower than France, but we're still paying those high yields. If you can reverse that trend, you should obviously see that an outsized effect in borrowing costs, which does then begin to transform the government's fiscal outlook, ironically, or perhaps not ironically, just as the election begins to approach.
So what have been your highlights of the budget so far then? Well, it was that little snipe at Nigel Farage, the right honourable gentleman for Clacton. That's what David's saying. Tried to get some laughs in the speech, but the delivery let her down a little bit, and the noise coming from the opposition as well. Marlowe's saying the cut on salary sacrifice is ridiculous. It is from 2029 though. So, that's going to, take that little bit of pain away. And then we've got Poppy saying the numbers don't stack up. Now, Poppy, 40 years in the market, one of the biggest gilt traders in the UK, saying the numbers do not stack up. That's slightly concerning for me to hear.
Yeah.
And that just alludes to your point, Axel. Let's wait and see where everything closes rather than making any big judgments.
Of course, if you remember 2012 and the infamous pasty tax, because this was the change to VAT on hot food, wasn't it? Everyone thought nobody would care about this, it's fine. And then it was that thing in the budget that sort of that was the omni-shambles year, wasn't it, of the budget. And these things often come out days afterwards, once everyone has had time to go through the numbers and really sort of pass the figures. I mean, that's not happened yet. And of course, interestingly, because the OBR released it early by accident, it means that the Conservatives can respond. It's the first time in history that the leader of the opposition can respond to a budget with all the details in front of her, because usually you have to make this stuff up on the fly. And it's hard to challenge a chancellor when she's had all the figures in front of her. So
right.
And interesting. And Reeves has just stopped speaking, so it would be interesting to watch to see if the Conservatives can land anything right away, tough as that is to do.
So, yeah, the next question was, do you think the cash ISA reduction, why did she reduce the cash part rather than going for this British ISA allowance, additional in the investing world?
I think it fundamentally is the caution that reflects, because you know that cash ISAs are very popular amongst the electorate, particularly, of course, amongst a lot of Labour voters and indeed older voters. And that's why they've left it with the over 65s alone. So I think you have to move it by sort of moving sideways, crab approach to it, rather than going all out at one go. I think it looks like perhaps ducking a big call, but I think clearly there are consultations at the levels that suggest that it isn't going to fly in quite the way I wanted to, perhaps.
Yeah. I also think it's a good idea, because you're weaning people off something they've known forever and gently introducing them to stocks and shares ISAs.
Alongside the education element as well, that she was quite clear about, naming all the her merry band that have been put together, and that's what we try and do here as well, isn't it? Is educate people on safe investing, and with their ISA, with their SIP, and that is only going to get more and more important, isn't it? With these reductions coming through in the cash element.
Yes, exactly.
Chris, final takeaways then before we round off this budget special.
They got away with it, I think. On the first, it looked like they got away with it. I think it appeases, as the Times were saying, it looks like a Labour budget for Labour voters particularly, but it's enough to sort of protect the Chancellor's left flank. And I think markets are reacting in a way that says, OK, we're happy with it as announced. Maybe they'll be less happy with the numbers once they've looked at them, but as you can see from the reaction in the yield, it is still below that magic 4.5% level.
Axel, final thoughts?
I want to see what happens at the end of the week.
At the end of the week now. It was the end of the day 10 minutes ago.
Yeah, well, today, short term, but Friday, I like, as you know, Friday closes at the end of the week. that will really tell me whether we've seen what we wanted to see or whether the markets have digested, because I think by Friday they will have just digested the budget. We do see again yields rising, which we definitely don't want to see.
Was the big rabbit missing then?
Clearly.
Yes. No, I don't think. I think she would have been criticised for a big rabbit. I think it having sort of been so, we say, doom laden in the sort of mood music leading up to the budget, to have then unveiled something would be seen to be irresponsible, perhaps. So as you pointed out, it's little bits here and there for everybody, rather than simply pulling one big rabbit out of the hat, which is often the way with chancellors, and arguably partly that's why we're in the position we are now.
Right, thank you very much for joining us. She was criticised for the amount of leaks that went beforehand. She certainly criticised the OBR for their leak on their internet website beforehand. But so far, so good. Looks like she might have got away with it, but let's keep the eyes peeled. Thank you very much for joining us, and we'll see you tomorrow morning, 7:30, as always, for Trade Live with IG. Gentlemen, thank you very much.
Thank you.
Thank you.